Hey guys, what's going on? Joe here. In the interest of getting this YouTube channel started and going, um, I realize I actually have to put up videos. So forgive the lack of quality and editing in this video. This is just going to be me speaking openly about how I search for trades, what I do, how I measure things. Um, and this is in an effort to give you, the viewer, kind of a first kind of visual on how I do what I do. So um, just to kind of catch you up to my intention as of this point, and I'm speaking to you on August 30th, 2017, Wednesday, middle of the afternoon. I'm in the Midwest time zone. So I have a friend that's in a different industry, and he is finally getting some feedback and getting noticed after probably about 300 video uploads. And I'm to the point I have less than 5, I think, on my channel. And the quality, really doesn't have to be that great in the beginning. And many of you, actually probably almost all of you, will be looking back at this if you find this video, and this video will be old. So what I need to be doing now is practicing my speaking and presentation, assessing how I want to get into editing once I do. This video will probably be completely unedited. And then just give you a basic walkthrough of what I'm looking for. So as you can see up in the address bar here, this is Oanda's web trader. And since I'm in the US, they only offer currency pairs for US traders. They offer metals and contracts for difference and indices to other Forex traders abroad. So that's kind of a governmental restriction thing going on, I guess. So I'm just going to go through all these pairs. I have them all marked off. You can select which pairs are shown by going here. You can add them or take them away from your watch list, if you will. I just allow all of them to be shown in this list. And I've got the Ichimoku indicator on here. This is a daily chart. So as I flip through the various pairs, it's all going to be with the Ichimoku system only, and it's all going to be a daily chart. I do not look at any different time frames whatsoever. So, and this buy-sell panel just keeps coming on. I go to the settings all the time and take it off, but it keeps flipping on every time I refresh the page, so I just moved it to a place where I didn't care about it. So this is it. So let me start flipping through some pairs, and I'll show you what I see. Now these big red and green blocks, this is part of a risk-reward tool. So probably through this presentation I'll place one on here, but the line between the red and the green is an entry level at the left, and I stop the green, I resize it like so at the close of the trade. So this is an exact 1-to-1. So for every $100 I risked, I would have made a $100. So that was a trade that concluded, and now it's kind of in stall out mode. And through these pairs, I'll start to kind of extract some explanations on when to enter and why, and when to exit and why, and what to look for. So forgive my lack of planning, but I just want to basically go through what I see and what I look for. And you notice I'm only on the second pair in this list. Just looking by myself, quietly flipping through these, it takes like 5 seconds each pair. So this is literally a 5-minute chore on my own, but it's going to be longer with you guys. So this was also an entry here. It ended at this level and came out here. What I'm looking for is a close, a daily close outside of the cloud, with the rightmost portion of the cloud green for a long, and this little blue line has to be above the little red line. This is a faster moving average. This is a medium, slightly slower. So as they are oriented in a northerly direction, a breakout of the cloud and a close as confirmation is good for me. So at that close or at that open, which would be 4:30, 4:15 my time in the afternoon, I could just press a market enter. Any close below this red line is an exit for me. So I'll just follow it up here with my mouse. And this is a close below the red line, so that's when it ended. And this trade started June 15th, and it ended August 15th. So it's 2 months, and then it was done. And you'll see how protective this system is. And I really need this to be below the stop. This is where a stop loss goes initially, and this needs to go below several lows of my choosing. I could have stretched it down here, but I don't like it to go past the cloud pretty much. All right, let me move on. Euro yen, very similar. Now, what had happened here was it came out, we had a green cloud. You see how the cloud is slid to the right? It slid to the right 26 days. All right, so when it came out here, it was probably still red cloud, so that's not confirmation for the long yet. So these two moving averages, they were in line for a long, and then they uncrossed, and that means it stalled out, and then they recrossed. So what I did was any close above this one, basically anticipating a recross. That was a tad early. I entered, and then I closed right here when I got to close under the red one. Excuse me. And this is the original stop loss level. You can see how many lows I covered. I covered this one too, and all these. And I entered just past this red line. It's called the Kijun-sen. So any close below it, and actually that was a close below it, but I just missed it that day. I just didn't see it. So that would have been almost zero loss. But I let it ride. I probably ignored it for a couple days, and away it went. This is also the type of thing that if you miss a day, it's rarely crucial, although you really should look at every day's closing. So for me, I get a new candle closure at 4 p.m. and then the markets are technically open again in Asia at 4:15, although nothing's really moving. So 4:15, 4:30, 5 o'clock in the afternoon is when I need to come back and look at this stuff. So now a new entry could have been here, this close over the red line. It would have been better if these two had crossed and the blue line was above it. So any of these could be an entry. I'm just not choosing to because it's bouncing off this resistance right here. One or two more closes, even if it pulls back, will cross these moving averages the way I want them to be. Excuse me, I got the hiccups. And then I'll probably be off and running for a long. Euro dollar. This one is still going. So this was entered. It was chosen to enter at the end of this day. Of course, that means the beginning of the next day, because these lines had crossed during this day. Original stop loss line covered all these lows here. I like to go with at least two significant previous lows. All right, whether they're on their way down or on their way up, it's fine. Two previous lows. So entering here, and any close below this red line will get me out, and we haven't had it yet. So at this moment, I've got 2.4 to 1, but it can go more. This was another long that worked well, almost a 2 to 1, same pair. Pound yen. These darker squares are where I've got orders placed, and since the right edge of the cloud is red, I have a short order placed here. But if it closes past this red line, this one right here, it'll be a cancel. So that was kind of a pending scenario. Pound USD. So we've got a green cloud. That means I'm poised for a long. However, this may switch to red, and then I may be interested in short. So really nothing going on right now. It's in the middle of my box that I'm interested in these two levels, the upper and the lower level. There's nothing going on there. Many of these pairs will be essentially, I'll shop and then I'll basically move on, and there'll be nothing happening. As traders, we do need to realize that trading on a daily candlestick chart, there may be 1 or 2 weeks at a time where we're not entering any new trades. And even if we don't have any trades going, we might not want to enter anything at all. It might be totally worthless. All right, so you can see that this is coming down. These two moving averages are lined up for a short. This is also a short signal. This line right here that's hidden in this tool, that green one just above my mouse that goes down, then up, then down, that is a line chart of these closes, and it slid back in time 26 days. So this has to be clear of the price that it's near in my direction for a short. So I've got short here, here, short here, but I'm in the cloud. The cloud, excuse me, is a no trading zone. So I will wait till I get a close outside of the cloud, probably around here. And let me put a rectangle. It'll end my stop. I'd like it to be beyond these, which means it'll keep going, a little continuation. So from here, and I like this red line to be somewhat in the middle of the range of my stop loss. So I would put my stop loss up here on top of these highs. You notice I don't count pips because this could be several hundred pips, and who cares? How many pips is this? This is 300 pips. So my stop loss will be 300 pips. And you'll hear me sound apathetic about certain things that certain traders are really interested in, like how many pips did you gain and loss. I'm interested in calculating a percentage of my account in gain or loss, not pips gained or lost, because I'm not trading the same size every time. So what I'm interested in, let me place as if it breaks this line, a short right here. So let's say it pops through this line and I'm interested in a short. My entry will be there. I'll predefine a stop loss level there. And I'll make this height in pips of the red area signify 1% loss of my account. So if I'm trading a $10,000 account, this is a $100 loss. All right. If I'm trading a $1,000 account, this is a $10 loss that I'm willing to tolerate. However, you can tell that this line, if I get a continuation, will slowly come down, wiggle down, and it will reduce the size of my loss should it happen. And then what I'm measuring once I'm in profit is the distance past the entry line away from the red zone. All right? That sounded like crap, I'm sure, but let's move forward and we'll understand each other better. Here is a trade that worked well. This one came down and closed and kept going, and it was moving fast. I really could have or should have entered right here at the opening of that day, but I was maybe an hour late or something. But a few pips doesn't matter. Let me measure that difference. There are some people that look for Forex traders online that they're really interested in all the pips. That's about 28, 30 pips that I was kind of behind on that, but you know, I don't really care. A lot of day traders use amounts of 30 to 50 pips for their stop loss. So if I was day trading this on a smaller chart, like a 5-minute or a 2-minute chart, then that 30 pips or so would be a big deal, but you could see it's not here. My original stop loss was 273 pips, and I got out of there with 545 pips. So on the close of this day is when I got out. So that's just shy of a 2-to-1, and that was a really great result. Here's a super small loss, another super small loss. It didn't matter. and now we're in kind of a stall pattern. You see this is a higher low than this one, so it's probably moving up, and if it comes out of the cloud, I'll be interested in a long. But we're in a kind of a no trade moment for this pair. Also, this line right here, the Chico line, is above price, so it's not eligible for a short trade at this time. Dollar Swiss, the edge of the cloud is red, however we're bouncing up. These say long, this says short, this line says long. So this is a mixed signal. So if you did trade on using multi-time frame analysis, like flipping through daily, hourly, half hour, 15-minute, you would get mixed results. And I can see the mixed signals right on this one chart here. Let me move on to dollar yen. So this will be a loss, probably. It's a quarter to 3 for me. And at 4, this candle will close. Now, if it closes above this line, that will be my loss, right? And you could see it's less than 1/10 of the full loss. So that's a really good loss, actually. You just take those. So I set an alarm for a close past this on another platform, which I'll get to later. But you have to be sitting there and scroll through all your trades to see what happened. I just set an alarm for a close across this line, you know, up or down, and then I know, you know, these 3 pairs you got to close, these 3 pairs you got to look at, whatever. So I don't need to quickly flip through 70 charts to see what happened, you know, at 4:30 in the afternoon, like in a hurry. So this had some potential. Why did I enter here? Enter here probably because it was just close to the level of the original short. It was just a few pips away, 40 or 50 pips. That's not significant to me. So, you know, when we start looking at Forex stuff, we hear people being so exact with pips and dollars and pennies and everything. And so many professional traders, when you finally find them online, they keep sounding inaccurate. They keep saying right about here is good, right about here is good, and you're like, what are you talking about? What right about here? You know, and you want to be serious about this stuff. Well, that's how a lot of these traders work. They say right about here, right about there. And that's all there is to it, you know. So right here, this green line that is a tracing of these closes is above price, but it can run into a lot of congestion here. What you don't want is, I should really thicken that, but this green line here, it's coming right here and it stops right here, of course parallel to where price is right now. So as long as this comes straight up and stays on the top side of these price candles that it's above, it'll be fine. So right now what I'm interested in is a close outside of the cloud, and then I'll enter market order. My stop will go below all these lows, and any little close below this red line, I'll get out. So that'll be good. And that'll be, if it's a loss, it'll be a super small one. And you see a lot of my closed trades are better than a 2-to-1. So if you know, say risk $10 and you lose only 2, you're only losing, you know, average 1/5 of your proposed full loss, and then you make a couple 2-to-1 trades. Well, you just gained 20 times your loss, so you're fine. You know, if you lose $10 and then make 300, it's kind of like, who cares? So that's one thing that really irritated me and irritates friends that are kind of behind me in this education, that are kind of following me along. When I was first looking at this stuff, I really wanted everything to be super accurate, and the truth of the matter is it's not. When you want into a trade, you want in right then, but you get the best price, which is not the price exactly you have marked. And then when you get out, that is a standby market order, essentially. And I'll get into more of that later, but you don't get the exact price when you want out. You just, I want out now. So you bail, you know, and you take your profits or your small loss. Here's a good trade that happened. I got a close outside the cloud, and maybe I got there an hour later, and oh, excuse me, no, this was like a stop order I had placed just outside this high and this high, and this was where the stop loss was placed in advance of price moving through. So price moved through. I got there that day. I noticed I had been entered, and this was the stop loss. Any close below this red line is an out for me, and it happened right here. So that was an exact 1-to-1. So every 10 bucks, say I risk 10 bucks here, I gain 10. If I risk $1,000, I gain 1,000. That was Aussie Swiss, Aussie Kiwi. This is going quite well, and you notice the moment I entered, it ducked all the way down, more than half my full loss allowance on this trade. It bounced again, and then it shot away, and it took like 2-3 weeks for me to get back to here. And now it is, in profit a little bit, and you notice this is a style of, should I say, trailing, but it's a manual close. So the stop loss is here, and it could stay there the entire duration of the trade. Now, but I'm watching this line here for a close, and let me get my mouse off of there, and you see that it's almost this tip of it. It's right here, but I have to move my mouse off for you to see it. This tip of it is almost up to my entry line. So if I do take a loss, I'll wait till I get an actual daily close across that line, and then I'll get out. And my loss, if it occurs, will be very, very small. If it doesn't occur, who knows how far this can go. And I will fully admit and tell you that I do not know where this is going. But I keep displaying the same behaviors in the markets, and my losses stay very small, and my gains stay a decent multiple of the average loss. And that's what you're doing. It's a very calculated way of rolling the dice and dealing with how they land. Here I am again, entry here, stop loss down here. Any close below this line, which happens there. Another 1-to-1. Now, that wasn't a huge multiple of the loss, but you see, I never even came close. So this is something commonly you'll find. So if you want to set up an Oanda web trader, you don't need any fancy stuff, any fancy coding, plugins, anything like that. We always want to cobble together this massive system. And most of the people out there on YouTube want you to buy their tool or what they've made in a product. And I don't have that. So all I'm doing is offering you, what I look for and what I see. So that was a CAD Swiss, CAD Yen. Here's another one, 1.5 to 1. This means that this profit made me 1.5 times my risk. So, and I speak in different terms because I don't know what size account you would like to hear about. So if I have a $100,000 account and I risk $1,000 here, this would have been a $1,500 trade. All right. Now I risk 1% of my account per trade. It's very, very rare that I lose a full 1% on a trade. It's more often that I lose less than half. And this is about 3 to 5 times my average loser. So this knocks out 3 to 5 losers. So that's pretty good. And then I win more than half the time. So you can start to kind of put together, the ratio that I do. I'm not doing it, the market's doing it. So, all right, this is one that turned against me the minute I entered, and this is called the Kijun Sen. I'll get into calculations and other things about the system a little later. I just want to have a little rehearsal speaking and give you a run through. So any close across this line, you see today it popped up and then it came back down. So I'll stay in until I get a close above this line. And I'll lose maybe 1/2 to 1/3 of what I've pledged. And what's the stop loss? Stop loss is 536 pips. And yeah, so that might be done with soon. Euro Aussie. This could have been in right here, and it had a really good green candle, and then it came down, so I figured it's got more to go. You'll see some discretion going on, and I covered all of these lows, and this one in particular. And I think I brought it down. I could have covered this one, but not quite. Either way, I like my loss area in pips to go about twice the distance as the Kijun Sen. So I like it to come down, and then I like to find some lows that are about twice the distance of the Kijun Sen. And if I get a continuation, like if I get a push up here, this moves up at half the rate price will move up. And this will slowly wiggle up and reduce the loss I would need to take if I need to take one. All right, so that was Euro Aussie, Euro CAD. That's about a break-even trade. Very similar setup. Euro Swiss. Here's a very interesting one. I'm glad I stumbled upon it with you guys. So a break of the cloud, but it was right on the Kijun Sen, and then I just waited for one more close beyond, and I got it. The stop loss would go under all of these lows. These two are the most significant lows that I'm interested in. It was just a total stall out going on. And then these lines were just about on top of each other, and a continuation would bring them uncrossed, which I was slightly ahead of. But you could literally just put a box around all of this, and a breakout of that box would have been a great trade for breakout traders. Essentially, that's what I'm doing. So this is a 93 pip, and let me see what it's up to now. Not that it's even close to my get out line, but this is 544 pips up. So any break below this one, and I'll get out. And so if it comes down here-ish, I'll still get out with probably 4 times my risk. So, you know, $100,000 account, that's risk of $1,000. I'm up $4,000. And you'll see a lot of these. Excuse my throat clearing. Euro pound. Decent scenario, a little smoother. Very close to the same. Euro Kiwi. This is good, up more than 1-to-1 right now. And now you can see that this red line is above my entry, which is right to the left of my mouse. So if it closes under here, I'll still get out, but that'll be like a small gain. But it's very protective of the money you're risking, this style of trading. Pound Aussie. This is really all over the place. I had 2 closes outside of the cloud, but they were so small, so it wasn't too impressive. So I just entered after I had 2 closes. What's more confirmation than 1 candle close across your level? 2 of them. So I waited for 2 of them. And then I entered and didn't do much, and then down it shot. Up again, almost took me out, and down again. So this is at the moment, it's past 2-to-1, which is good. So it's up, you know, $2,000 for a $100,000 account. Maybe later on I'll share a live account, one of my accounts, but for now I just want to kind of remain in the hypothetical with you guys, mostly to get experience speaking. Pound CAD, similar. Pound Swiss. I entered immediately in the red, progress for 4 or 5 days, and now back in the red. If it crosses below this, I'll get out. But it's poised for a short, but it's got a lot of resistance all over here, for sure. But it's got a lot of room. It can go all the way down, at least another 100 pips. It's kind of coiling up. This goes till last year, but Pound Swiss, Pound Kiwi. Okay, this will be something to watch over the next few days. So I've got a green cloud. I've got long arrangement for these two lines. I got this line, which is called a Chico span, which matches the closes. It's above the price 26 days ago. So we have all green lights. And if I get a close outside the cloud here, or if it kind of bobbles and I get a close outside the cloud here, I will be long. My stop will go down here. Let me measure the stop. Let's say I enter something like that. My stop might be 600 pips, but I'm not going to care. And look at the room it's got. So if my stop is 600 pips, let's say I enter around here, and it goes all the way up there, that's 850 pips. So that's worth it. And the way I devise my risk, it's a very low risk scenario. Kiwi CAD. So what happened here was I entered here and it closed on the other side of this, the Kijun-sen, the red line. So I got out, and that was about maybe an eighth of a full loss amount. Then I got to close back below it. I entered, and it's been great. So there's a small loss of, let's say, 2 out of $10, and now it's up $27. So I lost 2, and now I gained 27. That's pretty darn good. But that won't close until I get a close on the top side of this line. So that is just kind of in the oven cooking. Kiwi Swiss. And that is poised for a short. We'll see how it goes. I may move, now this is the entry here, but I may move it up. If it comes back inside the cloud, any break outside of the cloud will be fine. But this is a major point of support right here. A lot of people bought it back up here, and they'll be there again. So I think I'm going to wrap this up, getting to the point of running out of things to speak of. But this is pretty much how I flip through. Let me flip through at my own speed. That's a no trade. That's no trade. That's a potential entry after this closes. That's a stay in. That's a still waiting. That's a mixed signal. That's a potential short. That order's waiting. That's a mixed signal. So you see how fast I go down, and then these are, I don't know, maybe 60 or 70 of these, maybe 50. Every pair Oanda offers. So that's the main way I go about this. If anybody sees this video, right now the channel's so small, and has a comment or a question, please leave it below. Please do subscribe if this earns more of your interest in the future, and hit thumbs up if you liked it. Really appreciate it. And this will probably be uploaded this evening. All the best. Take care, guys.